Hello ladies and gentlemen, welcome back to the channel. Today I just wanted to cover something really quickly that I don't see a whole lot of people talking about, and recently I recently discovered, and it's just something that, like I said, I haven't heard anybody talking about besides a class that I took recently, and that is beta coefficient. You guys may be like, oh, well, that's some sort of math term, and I don't really want to hear about math, but in this video I'll break it down very simple. So before we get into it, go ahead and smash that like button and also hit the subscribe button as we continue the climb to 100 subscribers. Hopefully we can do that by the end of the month, and it'll mean a lot to me if you guys hit the subscribe button. So let's get right into it. So first of all, we'll cover that at the end of the video. First of all, what is beta coefficient? So let's read the definition over here. In finance, the beta of an investment is the measure of the risk arising from exposure to general market movements as opposed to idiosyncratic factors. The market portfolio of all investable assets has a beta of exactly 1. So basically what that means is this number is going to be how risky an investment is, whether that's stock, and I don't know whether mutual funds have it on it or not, but for the sake of this video, how risky a stock is. And when it says the market portfolio of an investable asset has a beta of exactly 1, that means that the entire stock market, the beta of the entire stock market is 1. So if you see a stock that has 0.5 beta, as you guys see here, that essentially means that the stock you're investing in is half as risky as the stock market. We'll take a look at a stock that has 0.5 or lower, and we'll also take a look at one that is almost double, if not double, the beta of the stock market. So if you have a beta of 2 or 3 or 4 or 5, you essentially just multiply the risk by 2 or 3, whatever the number may be. So, or if you have 1.5, the stock you're investing is 0.5 times more, or 50% times more risky than the stock market, which theoretically will return about 8% per year. So let's close out of this. So there's a formula through it. As you guys see, beta coefficient is calculated by dividing the covariance of a stock's return, et cetera, et cetera. We're not going to really get into that because this is not a finance class. As you guys see, we don't really want to mess around with that. That seems too in-depth. So the first stock we're actually going to take a look at is one that is very low in beta coefficient. Keep in mind the average coefficient of the stock market is 1. So everyone knows what Walmart is, WMT ticker symbol. So you're looking through everything, and it's just something I haven't really talked about, and I apologize for that. And it's something that, like I said, not many people talk about. So Walmart as a grocery service, even with the virus that's been going around and stuff like that, people will always need groceries and milk and food and all sorts of different stuff, or clothing. People will always need that. So Walmart will consistently be a safe bet, even in times of a recession or of a correction like we've been seeing. So you're scrolling through, you're looking at all these things, and right below market cap on, which is 332 billion, which is quite a large cap. I did not know that about Walmart, but obviously I knew it was a large company. Right below market cap on Yahoo Finance, you see something that's called beta. And this is just something, like I said, that I've overlooked. And you scroll over to the right, and it's 0.43. So essentially, Walmart stock, and again, this isn't something that you purely base your investments off of, but it is something that I have heard a lot of in portfolio people who plan your portfolio, or just people in general who are planning their portfolio, base their investments around. I heard a story, and someone was saying they wanted their beta to be 1.4, but then they wanted to add more shares of Tesla, and currently their beta was at 1.1. So they asked how many shares of Tesla they could add, and they calculated based off that. So again, they had done their research on Tesla, they liked what they saw, and they were willing to raise their risk or their beta in their portfolio. And obviously, if you invested in something like Walmart, your beta would go down in your portfolio since it is so low. So let's take a look at the exact opposite end of this. A stock that I believe I used to be invested in. I had like a couple shares of it back on Robinhood, and a stock that has just absolutely been destroyed recently. Aurora Cannabis. If you guys don't know, it's based in Canada, I believe. and they sell medical marijuana, cannabis, all sorts of different stuff related to that industry. And clearly, it's a very risky industry, and clearly, it's been slammed recently. And like I said, I didn't even know it was down to $1 a share. I had it around $8 or $9 or $10. I had it around here, right around that area, and I thought it was going to be a decent stock, but clearly that was not the case, or is not the case currently. And it may make a rebound. It has a 1.3 billion market cap. So obviously very interesting play, but that's not what this video is about. You scroll down below market cap and you find the beta of 1.97. So this stock is almost twice as risky as being involved in the in the stock market in general. If you have an S&P 500 index fund or mutual fund, something that mirrors the stock market, that would be a coefficient of 1. This has a coefficient of 2. So clearly, Aurora Cannabis is a very risky stock to be involved in. Now, obviously, the share price is very low, so you wouldn't have a whole lot in Aurora Cannabis in general. But they could go bankrupt in a month. They could go bankrupt tomorrow. It doesn't really matter. They may not exist tomorrow. Now, obviously, I think that's a very dramatic and drastic thing to be saying, but it could be true. So obviously, if you're very risk adverse, which means you want to stay away from risk, you don't really want to invest in Aurora Cannabis. You would want to invest in something more like a Walmart or a Kroger or something like that. They have the grocery store, but they're still good stocks. Or something such as, like I said, I talk about in all my videos, I invest in Disney, and I believe right now they're at a 1.05. They've actually got lowered, 1.04 coefficient. And obviously that's just above the stock market. If you want to look at Carnival Cruise Lines, another thing that I've been invested in, and another thing that Financial Education talks about, they're a 1.4, and obviously with the current virus going around, that gets affected by that. So it's just simply it's honestly a very important thing. Now, obviously, you want to look at the financials and all the different things, the PE ratio, the forward PE, all sorts of different stuff like that. You want to do your homework, but at the end of the day, you also want to come back to the beta coefficient and take a look at how risky it is in compared to the market, because, the stock market as a whole in general is risky. You never know. It could go down. As you guys see up here, we've been slammed recently. We go up and down, up and down, up and down, and that's just part of the stock market. But when it comes to something that's twice as risky as the stock market itself, that may not be something you want to invest in, especially if you're older and especially if you're coming close to the age of retirement. So that's going to do it for this video, guys. Before we end, I just wanted to show you guys the chart that I had talked about in my previous video. If you guys haven't watched that video, I posted it earlier today. I wanted to just go over the fact it's about Roth IRAs. I think it's very important for you guys to go watch that video. Look at what mutual funds are, but look at this chart right here. So the amount of people who watch my videos, 98.3% are not subscribed. Only 1.7% of the people who watch my videos are subscribed. So if we can get that number up to 5 or 10 or 15 or 25%, that would be amazing. So like I said at the beginning of the video, go ahead and hit the subscribe button if you're not subscribed, and we can continue growing together. And until next time, guys, happy investing.